Chapter 2: Real Estate Investing, the Pros and Cons. Investing in real estate has its pros and cons. There is an upside of owning a real estate property when your investment is done with forethought and care. If done properly, the property can turn out to be a worthwhile investment. As stated in the previous chapter, if you're looking to invest in real estate to have a continuous positive income, then investing in rental properties are the type of investment you will want in your portfolio. The main reason for owning a rental property is income created by the rent paid by the tenant each month. As an example, if you purchase a rental property and charge the tenant $1,750 a month, the annual rent is $21,000. If the property has been financed through a lender and you have a mortgage with a monthly payment of $950 a month, that includes the mortgage payment, insurance, property taxes, and interest, then annually the payment is $11,400. Subtracting this from the $21,000 annual rent payment, the annual income from the property will be $9,600 per year or $800 per month. Now, if you paid cash for the property, the entire $21,000 per year would be yours, minus property taxes and other expenses, such as maintenance and repairs. As long as the property is maintained and repairs, if any, are needed to uphold its value, and the area where the property is located has not had a downturn, then the property is still a valuable investment. The profit made from this money is to have a portion set aside to maintain the property's value, annual taxes, possible homeowners association fees, if any, and for possible unexpected repairs, i.e., water heater, dishwasher, or a refrigerator may need to be replaced. An additional benefit in owning a rental property is any renovations and repairs that the property may need. It does take an outlay of money to improve the property, whether it's a roof repair, an upgraded bathroom or kitchen, or cosmetic changes that are done. The result of these repairs increases the value of the property. Changing out old carpet or tile or hardwood floors, upgrading the bathroom or kitchen, or just changing out old appliances for new ones all help to increase the property's value. This is an added value. Added value enables you to charge higher rent. It also gives you the ability to gain a better profit if you decide to sell the property for a higher price than you first invested when you purchased the property. Any repairs and renovations that are considered improvements to the property are tax deductible. Additionally, property taxes, operating costs, mortgage interest, depreciation, and repairs are tax deductible as well. If you pay a property manager to handle the property and any upkeep of the property, i.e., weatherproofing, painting the exterior, or planting trees to shade the property, that helps a tenant to save a bit on electricity, because it can be an expense when running air conditioning during summer months is also tax deductible. Added value and higher rents when the property is upgraded. Tax deductions that can be taken are not the only financial benefits that come with owning a rental property. Prices in rental estate do not change daily as it happens in banking, where interest rates change, or the stock market. Comparatively, real estate is a stable investment, but real estate markets vary from one city to the next, and in some cases, one county to the next in the same state. This being said, property values can appreciate in some counties and cities, and either remain stable or do not fluctuate as much in other areas. One of the ways to find out how an area you may be interested in investing is to study the community. Learning about it and its businesses, jobs, city government, all that is part of a community is the best way to learn and decide whether or not this would be the type of community you would want to invest in a property. Investing in real estate gives you the opportunity to build a portfolio and generate cash flow that can essentially support you and become your major source of income. The freedom it gives you to set your own schedule gives you greater control over how the properties are cared for, as well as gives you the time to research your next property acquisition. You have the ability as an investor to buy at below market pricing. A property may need to be rehabbed, and once done, the property will be worth the effort. The neighborhood that you choose also factors into a property's value. If the area is a prime area for renters, which also will add to the property's value. You are able to build equity with investment properties. Rent that is collected pays down the mortgage if the property is financed and build equity. You gain leverage to purchase more properties with increased equity. The more properties you own, there is more cash flow. You can put aside money for a college education for a child, purchase a second home as a personal vacation property, save for retirement, or invest in more properties. Your contribution to a community when you invest in real estate. A property that is run down and needs to be renovated stands out in an otherwise nice neighborhood with homes that are cared for and maintained. This type of property brings down the market value for all the homes in the area. Investing in this type of property and bringing it back to a new life are happy that the property is rehabilitated. Neighbors are happy because the property is no longer an eyesore and their property value increases. More importantly, residents take pride in their community, and renovating a property and making it habitable for someone to live in is another way you add value to the community. It's already been pointed out how improving an investment property gives jobs to many interested real estate professionals, such as contractors, roofers, and plumbers, and the like. Teaming up with reputable professionals such as these will build a working relationship and trust, which is invaluable. A real estate investment that is used as a rental will give others a home. Providing a home in a good neighborhood is a contribution for others to benefit from. Living up to the responsibilities of a landlord by providing a valuable and safe environment is another way you can give to the community. There are many benefits in real estate investing being used as a rental property. A solid investment can create positive income, create a number of tax deductions, have the mortgage paid down on the property, provide renters a respectable place to live, and contribute to the community. With all benefits come detriments. Investing in real estate and using it as a rental property can make for some experiences that are not at all pleasant and cost more than you want to spend or lose. Real estate investing, the disadvantages. There are many types of real estate properties to choose from when you think about investing. The most popular and financially beneficial to invest in are those properties that are used as rental properties. There are home, condos, townhomes, office buildings, fourplexes, and parking lots, all that can serve as rental properties. However, there is also land that one can invest in. Land does not go anywhere, and unless you build on it or sell it to a developer who uses it for the development of housing or commercial use, there is no profitable cash flow once you purchase it. All that you can do is pay the property taxes and, if the purchase was financed by a lender, pay the mortgage on it every month. When an investor purchases a real estate property and uses it as a rental, it can tie up the investor's funds. A rental is not a liquid investment, like money or even jewelry, much easier to sell than a house or condo. This can present some problems that are not expected. Some of the problems that can arise when you invest can be purchasing a property that, originally purchased, is situated in a good neighborhood. People have jobs. Businesses in the area are doing well. Then the neighborhood begins to decline. A major employer closes its doors, putting people in the area out of work. As the area declines, more money is lost. Another situation can be a problem with the house that is not covered by insurance or is not covered in a contract. The investor suffers a monetary loss. Ham, 2017. Property values decline when a neighborhood declines as well. If the property is put up for sale, the probability of selling the property for the financial profit the investor had in mind when first developing the property is not good. It could take a while before someone wants to purchase the property, paying as close to what the investor would like. The sale of a rental property while there is a tenant residing in the property is permissible. The lease will be honored by the new owner and allowed to let it run to term. Then, the new owner can either renew the lease or have the tenant vacate, giving them enough notice to seek another place to live. The new owner may then either use the property for themselves or a family member, or place the property on the market and sell it. Real estate scams. There are a myriad of scams that people run into, especially if they don't know enough about real estate that allows a scam to be played on them. One scam that is one of the easiest to perpetuate is the assigning of a contract to another party. An example of this is a novice real estate investor that signed a residential purchase contract to invest in a property. He did not have a realtor to assist him with this transaction. He found a property he liked and signed the contract with the seller's realtor. He submitted a $7,000 deposit to hold the property. The buyer needed to secure funding from a lender. When the buyer signed the contract, there was never a discussion about the terms of the contract, only that he needed to get funding. Additionally, the buyer only read the areas in the contract that he had to sign, which were pointed out by the seller's realtor. The buyer thought that the transaction would be moving forward when he secured funding. However, it was taking a bit longer than he anticipated. There were a few hiccups with his credit, and although he had been turned down by a bank, he had a mortgage company working on getting him the loan that he needed. The seller's realtor called almost a month after the signing to follow up on the buyer's status with the funding. The buyer still had no word from the mortgage company, having just called them earlier in the day and asked for a few more days to hear back about a loan. A few more days passed and the realtor called the buyer again. The realtor told the buyer that the contract had been assigned to someone else who were going to meet the terms of the contract and pay cash for the property. It was explained that the seller wanted the property sold before the next mortgage payment was due, and this other party could take the property off his hands easily. The buyer was surprised and disappointed and asked for his deposit back. The realtor told him that the deposit was forfeited because of the amount of time it had taken the buyer to secure a loan to fund the transaction. The realtor also pointed out that even as they were speaking, the buyer still did not have the money needed to fund the transaction. The buyer had to take the realtor to court. The buyer explained to the judge that a specific cutoff date to obtain a loan was never given to him. The realtor could not produce a contract that showed that a cutoff date was indicated. All that the realtor could show was a basic signed contract. The realtor wanted to make a sale, and the seller didn't care how it was done. This type of transaction is one of the examples of how not to invest in real estate. If you get involved in a real estate investment transaction without understanding how they work, not asking questions about terms, not reading the contract fully, and not asking questions about any due dates, is setting yourself up for failure and losing money before you even begin. The buyer was able to get back his $7,000 deposit, ordered to be returned to him by the court. He was also awarded court costs, but this did not make up for the time he had to wait for the case to be heard. The entire process tied up his money that could have gone to another investment property deposit. This was also a way the buyer almost lost the deposit because of the underhanded way the realtor and the seller were trying to enrich themselves with the buyer's deposit. Some other types of scams involved social media advertising with unscrupulous lenders promising to be able to secure loans for investments in real estate, receive the escrow deposit from the buyer, and then disappear. Title companies who work on putting the final closing documents together have their wire transfers hacked. The deposit for a property to put into escrow is redirected to an outside fraudulent account, and the funds are never received. There are several types of scams involving real estate investing and purchasing that can rob investors of their finances. In order to avoid these scams, the investor must do their homework and due diligence to check up on who they are dealing with. Read all that is contained in any contract they are signing and ask questions about any deadlines that apply to the transaction. If you are not getting the answers to any questions you may have about the property, contract, or deadlines, don't sign the contract. If the seller wants to make a sale, they should be more than happy to supply you with the answers via their realtor. Also, make sure the realtor is actually an active realtor. There are those realtors whose license have been suspended from either not paying their dues or breaking any rules that the Department of Real Estate of their state that has suspension and fines attached to them. Maintenance of a property and tenants. When you own a real estate property and use it as a rental, you become a landlord. There are also things that encompass the responsibility. When you acquire the property, the first question that needs to be answered is how much would be the costs for repair and maintenance. Are the repairs going to be massive, or are they only going to be cosmetic? If they are more than what you had expected, and there are delays in completing them and bringing the property up to all codes imposed by the area where the property is located, then this can cause delays in being able to rent the property. This may also negatively impact your finances if you end up spending more than was originally put aside in your budget. Tenants can also present problems that you would rather not have to deal with. You are a landlord, and the final say of what happens with your rental property is yours, and you have to deal with the tenants. If they are not paying their rent on time, this can negatively affect the cash flow if they are constantly late or pay over the course of the month. If you have a mortgage payment due on a certain date, you have to pay it out of your own funds. This was not what you had in mind. If the tenants have pets and you impose a pet deposit, this does not guarantee their pets will not damage the property. One investor kept the security deposit and the pet deposit fee when she examined the property and found the tenants' 2 dogs had chewed the entire bottom of the kitchen cabinetry. There are also tenants who move in the middle of the night, leaving no forwarding address and a mess for you to clean up. If you're lucky and locate them, you can take them to court. But again, this is time and money spent that could go to more positive things like searching for the next property investment. Using firms such as RentPrep or the National Tenant Network to do background checks on prospective tenants is a way to avoid the kind of drama that comes with problematic tenants. The fee for each background check is paid by each tenant, usually between $25 to $35. These firms are able to give you information and an idea of what kind of renter they can be. Another way to find out more about a prospective tenant is to contact their former landlord. There are many types of pitfalls that can occur when you invest in a real estate property and use it as a rental. Knowing what the negatives are can possibly help to sidestep them. Investing in real estate can be rewarding and profitable. It creates a supplemental income, tax deductions, and cash flow. There are many benefits that should not discourage you from investing. Learning how to invest knowledgeably will make the owning of real estate and a rental property an excellent experience.